All right, guys, episode number 8 here, applying NQ and RSP. So we've discussed on a basic level what NQ and RSP represent and why they're important for us to be watching. So now we can actually move into understanding how they actually integrate into the contextual analyses. So there's not a lot of information that you guys have to understand. There are a few very important key points that we're going to hit home on. But by the end of this video, which shouldn't take too long, you guys will have a sufficient understanding here. So, as we've stated, these tools are primarily for observation. They are not playing a central role in our decision-making process, like the VIX. So if NQ and RSP are both exhibiting strength or weakness, so let's say the NASDAQ and RSP are trading above their previous session high or below their previous session low, then these two examples would reflect aligned participation on a shorter time frame between tech and the overall broader market. And so what that's going to do is increase the likelihood of a trend move in ES, or of sustained upside or downside price facilitation within ES. And so obviously if these names are misaligned, if tech and the overall broader market are misaligned, one is strong and one is weak, then that uneven participation is going to increase the likelihood of fragile and rotational price action within ES. And before we move on, I just want you guys to understand that this is not static, right? Don't treat what I'm saying as static. Don't treat it as some sort of like absolute mathematical equation, okay? Markets are always changing. Context is always changing. There are going to be times where NQ and RSP are aligned in a way that would make you assume that ES would be doing or exhibiting some sort of behavior, and then ES is just doing like something way different. There are times where that happens. And so as you interact with the tools more, you'll understand that. So the reason that these tools are not playing a critical role in our decision-making process is because as day traders, our targets are typically nearby. So for me, my targets are going to be, on most occasions, the overnight high or low, the intraday range extremes, so like the intraday high or low, or nearby supply or demand zones, or intraday tape levels. There will be times where I'm targeting like a point of control or a gap fill, but on most occasions, these are going to be the targets. And so they're always, and on most occasions, in close proximity. So even in cases where both instruments are exhibiting some sort of behavior where, let's say, NQ and RSP are trading above their previous session high, so they're strong, our targets are still going to remain relatively close. And I'm not looking to position myself to be riding some sort of huge trend to the upside to catch like 90 points in the S&P 500. Regardless, however, and despite this information, monitoring these tools is still important because they do reflect the internal structure of ES, of the S&P 500, and they help inform decision making by showing how different contextual components of the market are performing. So, like what you guys will see is that, let's say that the VIX is exhibiting behavior that allows your interest in longs. Then price pulls back into demand. Let's say that RSP is also strong, but let's say that the NASDAQ is just super weak. Like the NASDAQ cannot catch a bid and it cannot sustain any pop to the upside. This is really going to weigh down on ES. And maybe before you look for confirmation on the tape, maybe before you are looking to getting active in a position in demand, maybe you want to wait for NQ to bounce first. And when NQ starts to bounce and show that strength, then you will look for confirmation. So maybe under that condition, under that context, rather than trying to take a trade near the low of day and pick a bottom in demand, you want to wait for a bounce first. You see what I'm saying? There will be times, and again, you guys will just understand this as you interact with these tools more, where NQ or RSP will be exhibiting like some sort of anomalistic strength or anomalistic weakness. And understanding and interpreting that information is just going to be playing a role into your analysis, such as the example that I just said. And so just like VIX and ES, we are marking the previous session high and low, and we are evaluating whether these tools are strong or weak based off of how they're trading around those levels. So if you guys need to go back to the applying VIX video to understand how we're actually quantifying or labeling price behavior within NQ or RSP or VIX as strong or weak, then go back and do that, because we do label that in that video. And of course, always be considerate of the higher time frame context. A lot of traders get smoked because they don't understand what conditions they're trading in on a higher time frame perspective. So just one more context video after this one. We're going to be tying all this together in a video for the VIX, NASDAQ, and RSP.